distinctiveness to our own. Your culture will adapt to service us. Resistance is futile.
I'm ready to irradiate your existing brain cells. Proceed.
Alright guys, welcome back to Wolfpack Cryptos and MMG Invest. Alright, you guys like that intro video? I sorta made it. I made half of it. I put the music on there. You guys listen, if you don't understand the NPC meme, it's a pretty big deal. It's like it's revolutionary. It really is. Essentially, if you know what groupthink is, I mean, think about it. Everything they taught us in school was memorization. It wasn't critical thinking. It wasn't. They didn't teach you in public schooling, at least, even in college, how to think for yourself. They just taught you to memorize, and then you took a test, and whoever has the best memory is apparently the smartest person, right? That's why. That's why we have those Ivy League people. They have no common sense, and they might be book smart because they have great memorization. But when it comes to like real life situations or noticing what's going on, your environment and whatnot, they have a hard time. Yeah, but that NPC meme is hilarious, and it really shows people that they're not thinking for themselves, that they're just regurgitating everything they see in the news, everything they see on movies and TV shows, whatever articles are on Facebook or Snapchat and it really annoys me, because whenever I'm in public around friends or former friends or around family, I mean, pay attention. Pay attention. Are these people actually thinking for themselves, or are they just repeating something that they've heard? And it really crawls under a lot of people's skins, and it triggers them, especially SJWs, and it's hilarious. It's like it's a meme that red pills people, and it makes you think, oh man, am I thinking for myself? I don't know if these people have the brain capacity to even start thinking again, or even question if they are thinking for themselves. That's how you know that you could think for yourself. Like, you could reflect upon oneself. It's self-consciousness, right? And critical thinking. But you see that NPC thing you see it everywhere. Another good example is HODL. Right? Remember the HODL cult in 2017? How did that work out for them? And what else? We got Bitcoin maximalists. There you go. Why do you guys think that stock markets go into bubbles? Because everyone becomes complacent and they actually stop thinking for themselves, and then they let, the media and the experts tell them what they should believe and think. And the NPC thing is really good. I really hope it never goes away and keeps spreading. And it shows humanity, that it shows people like that, you need to wake up and actually start doing things on your own. Self-knowledge, reading books, reading all sorts of books, reading taking in information on your own and becoming a curious human being is how you bring back the innovation, your personality, and you don't become a part of a cult. Like, we've got Scientology out there. You guys, everything's a cult. Think about it. Everyone's brainwashed in some sort of way. And I know people look at me, they're like, oh, you're like some evil capitalist libertarian, blah blah blah. Yeah, I know, but I understand other arguments, because I used to not be such freedom loving person. All right, I'll digress. All right, so for all the people who emailed me, about 50 people who are wanting to get into Wolfpack cryptos, but you guys don't know how to you guys don't know how. I mean, you guys are brand new. You guys are noobs. And there's nothing wrong with that. Everyone is new in the beginning. Let me know in the comment section if you guys want me to create like a separate group where I personally help you guys figure out how to send transactions, how to do the basics. And it's like somewhat personal coaching, I guess. How to, like, intro to cryptos. You know, my time is very valuable and I'm really overwhelmed. Maybe $10 to join that group and I'll personally help you guys. I don't know. Put it in the comment section if you guys need, you know, hands-on. And here's the thing. If I don't get enough comments, enough people who want that, then I'm not going to do it. But if I get a bunch of people who want to do it, then I'll probably do it. All right. Yeah, so I'll leave that there. I'm going to cover right now. I'm going to do TA for Bitcoin. I'm going to do TA for the stock market. Then I'll glance at the news. There isn't too much news. I forgot to talk about the Fidelity brokerage account, which is allowing cryptos. I'll touch base on that after the TA. All right, I'm going to do stock market first. All right, here's the S&P 500 weekly time frame, weekly chart. You can see that I put in these. I put these in a long time ago. Okay, so QE1 is quantitative easing. That's when the Fed injected trillions of dollars. They did 3 rounds of it. Then they did Operation Twist and a bunch of other crap. They're just fancy names for they printed money and bought assets, or printed money and gave it to the other banks like JP Morgan and all that. Trump won over here. First rate hike since 2007. Since 2007, but this happened in the end of 2016. Was right here. The market dropped. You can see that, and ever since then, rates have been increasing. The Fed's been increasing it. Very small amounts. Okay. Bank bailouts was over here. Here's the crash of 2008, 2009. The candlesticks is the S&P 500, by the way. These colored lines I'll talk about those in a second. Okay, mortgage-backed security bubble right here. That was the peak. Here was 9/11 back here. Market also tanked then. And the Nasdaq .com bubble, 98, 2000, around that time. All right. So this is a macro chart. This is for long term. This isn't for like tomorrow, next week, or even a month from now. I'm just looking at the long term picture. So the blue line is the euro currency. The green line, solid line, is the dollar currency and its value. This orange line is the yield on the interest on the 10-year bonds. Now, the yield has been going down for like ever, for decades. Well, steadily for decades. And you can see that right here, right? You see that? And that's because bonds have been going up for decades, like 3 decades. And that is a major, major market cycle. And what I'm seeing right here is the yields look like they've bottomed out on the 10-year. And the 10-year is like taking the average of the 30-year and the 2-year. So the 10-year is the one you look at. So also I noticed a pattern. This is arguably, where is it? Here, it's arguably a cup and handle on the 10-year yield. And this is a weekly chart, so a very large time frame, okay? Like you can see 2020 right over here. See that? So I'm looking at this, and a cup and handle formation usually means breakout. And it's a little different from Bitcoin, right? Because it will break out on in the traditional markets. So that means rates might keep going higher. If rates get past, if the 10-year yield um, gets past, well, I can't see it on this chart. But if it gets, I could, here, let me go to the other chart real quick. One second. All right, here we go. So I want to see where the yields are going to break out massively, because that's probably going to really crash the market. 10-year yield treasury note. Let's go to the weekly. All right, here we go. Yeah, so if the 10-year actually breaks above 3.6, so that's 3.6%, it could start running, and it'll set a whole new bull market on the interest rates, and it will crash the bond market, which would probably I don't know. It might be good for stocks for a very short term period, like right afterwards, but I wouldn't count on that at all whatsoever. But it'll tank the stock market. I think that's what's really going to happen. So look, 3.6, it'll start running. Once it breaks 4%, I mean, it's going to go all the way up to 6-7%. And those are historically normalized interest rates, anywhere around like 7 to 10%. Now, Paul Volcker, that was different. That was 20%. That was really up there back in, when was that? 1981. But look at this bottoming right here. This looks like a bottoming pattern. And if this breaks out, that's going to crash the markets, and that's the beginning of the end. That's all I got to say. People are going to get everything repossessed. Like, people are going to lose their homes, their cars are going to get repoed. Even retail investors. I was watching another YouTuber, and he mentioned something very something I never even thought of. Whenever a retail investor signs up at a broker like TD Ameritrade, Options Express, you name it, Charles Schwab, Fidelity, you have to click to not get margin. When you sign up, they automatically give you margin. And I have a feeling everyone goes, margin, I could really maximize my gains. Well, taking on margin in your brokerage account is like, it's like taking out a loan at the bank. There is interest on it as well. And if your account blows up and your margin goes negative, like, you guys have to understand the risks with trading and investing with equities. If you get a margin account, so if you're not savvy, just don't get a margin account. Okay, don't, because there is time decay and interest on it. But so if you sign up for a brokerage account, don't get margin. But most people probably got margin. They probably leveraged up, and when the stock market crashes, not only are they going to lose all their money, but they're actually going to go negative, and you're going to owe money to the broker. And that's another huge risk that's kind of making me nervous. Can these brokers actually go under? And can the Fed bail them out? I don't know. Like, when these brokers go under, they could foreclose. Like, if you don't pay it, they'll take your home, your cars, and whatnot. All right, so let me get back to what I was talking about. All right, here's that chart again, S&P 500 weekly chart of euro, dollar, and bonds. Yeah, so if the U.S. Treasury takes off, the euro, the blue line, it's going to dump. The euro is going to just dump in value. And it's going to dump either way because there's a huge uprising in Europe, and they're sick of the European Union, and it's going to break up. So the euro is going to tank. And here's what I'm thinking. What might actually happen? I think in the short term, I mean, I'm not 100% positive, okay? This isn't financial advice. This is an educational channel. I'm just teaching you guys some stuff here. And I could be wrong, right? But if the market really tanks, right? and the bonds go up, or the yield on the interest rates go up, and bonds crash, I think everyone's going to just do the simplest thing they could do, which is sell everything all at once and just jump into dollars. Now, here's the deal. In 2008, when everyone sold everything and they're getting margin calls, gold and silver also fell with the market if it's a big enough and steep enough fall, like a massive fall. And what that does is gold and silver will dump, because what they do is they sell everything. And they'll definitely sell gold and silver because it'll be the only thing up in the beginning of the crash. So picture it like this way. Let's say it takes 2 weeks. Let's say for an entire week the stock market's crashing. The first few days, gold and silver is going to rally massively. And then all of a sudden, you're going to see that gold and silver is going to drop with the stock market for the rest of the week, for the last 2 days or something, because people are getting margin calls, and then they're selling their gold and silver positions, which may be really small, like 2%, 5%, that's like the average, to cover their losses on all their FANG stocks, okay? And then you'll get this huge dip in gold and silver, and then like weeks, maybe days, I don't know, months maybe, I don't know, gold and silver is going to just shoot to the moon. I think it's going to happen really quick. Like, it's going to be quick. So that's what I'm thinking. But for now, the short term. Let's talk about the short term for stocks. Then I'll go to Bitcoin real quick in a second. Where is it? Okay. All right, here's gold. This kind of looks like a bull flag, but this looks like a bottoming pattern right here. But it's very neutral. I'm not buying into this unless gold gets above 1230. If it goes above 1230, I'll maybe jump back in for another day trade, but a quick trade. I have a feeling the stock market's going to recover, but I'm about to take a look at the S&P. I really haven't looked at it. Let's take a look at the 4-hourly. I like this on the 4-hourly. The RSI has been so oversold. And the MACD looks like it could cross maybe next week or maybe in a day or so back up. I mean, we'll see. If the gold breaks down past just another like $10, $15, so past 12.25 or even 12.20, I'm not going to buy that dip because it's probably going to fall back down. I already took profits yesterday, right, around up here. So I'm looking for gold to break past the last previous swing high, like up here, right? So it would have to get back past 12.35 for me to buy back in as a momentum trade for maybe a few days. We'll see. And I'm using ETFs. Let's take a look at the markets. This is not. What is that? Nope. All right, here we go. Here's the Russell. Let's see how the Russell's doing. This is a 1-hour chart. This 3 needs to trade above the 2 on the 1 hour. So in the next hour, right? So we need to get back above 1,600 on the opening bell, which will be in about 2 hours from now. So we'll see how this plays out. Let's take a look at the 4-hourly. And it's on a 5. And the 5, there. Okay, so I've said this in the past. We have 1 and the 2 and the 3 candle. On the 4th candle, there tends to be a dip, but on the 5th and the 6th and the 7th could take us to a 9, up around 1630 on the Russell. And I'm looking at the Russell because these are smaller stocks and they tend to whip around quicker, and they might actually give us an actual precursor to the S&P and the larger indexes. So let's look at the Nasdaq. That's where a lot of these big things are. All right. So here's the 4-hourly on the Nasdaq, and so I don't want to see this ending up as a dead cat bounce. This is the Nasdaq 100, by the way, and this is a 4-hourly chart. So the price needs to actually hold and rally this morning. If it doesn't, then gold I think is a buy, and the price is gonna probably fall back down around 7,100, 7,000, and stabilize hopefully. If it doesn't, then man, oh man, like then we're looking at a 15% correction on equities as a whole, something around there, something like that, right? So there is a lot of resistance on the 4-hourly up here. So if the price could get above 7,300 on the Nasdaq, then I think it's a buy and then a sell for metals. But if it breaks down, and I mean it breaks down, it doesn't have to break down by a lot, 7,250, then it's in danger of this turning out to be just a dead cat bounce. Today's Thursday. I'm hoping for another rally on equities, and then Friday, everyone's going to probably take profits and get out of the market. And that would, guess what? It would create a typical triangle, right? Maybe a descending triangle here, descending wedge. And that would not surprise me, okay? Because these market movements, they always turn out to be, you see triangles everywhere because it's it's a bunch of fractals. All right, guys. All right, let me go to Bitcoin. All right, shorts are piling up again, and it looks like there was a dead cat bounce on the Bitcoin longs. So this is the shorts on the left, longs on the right, 12-hourly time frames. And soon as these longs start breaking down, which I expect them to, Bitcoin's going to start dumping. And this is a daily chart on Bitcoin. RSI is overbought. This cross on the MACD looks weak. And the 3 is trading below the 2, which is negative. And the 4 is trading below the 3, which is really negative on the daily time frame. The daily time frame is a large time frame, right? Each candlestick's a day. And that looks very, very bad. Plus, it's in this red Ishimoku cloud, which there's a lot of resistance. Let's go to 6-hourly, see what's going on there. So a lot of consolidation right here. There was a 9 sell. It did fall. Someone bought that dip, but it might regret it with the MACD that's about to cross to the downside. And it looks like the RSI is not catching any momentum. So right now I'm still out of, right now I'm in cash across the board, except my long-term holdings in mining stocks, right? But my trading capital, I'm not in anything in equities. I'm not in anything in Bitcoin or cryptos. Look at this. It's like a currency. It's a stable coin. Bitcoin's the new stable coin. But this doesn't look bad. This doesn't look good because the daily looks bad, and it's gonna, when it breaks down, it's gonna break down pretty quick. Yeah, look at the 4-hourly, somewhat holding up, but this moving average right here, the 100, the 50 period moving average, it's holding up the price. But as soon as 6,400 breaks down again, look out below. I expect the price to go straight back down to 6,200. Somewhere around there, and then it'll probably bounce. The market cap's at 211 billion. The volume's dead, guys. It's still dead. So we need that. What we need. Oh, I found this. I used to look at this a long time ago. It shows you where the Bitcoins are going when people are buying large sums. I don't know how accurate this is. Probably not very accurate. So Here's the total market cap. It's unchanged for a while now, so that is an indication of a possible bottom. Bitcoin dominance, it's been sitting around 50% for quite some time. Total volume 1 year, there was like a huge spike right here. I don't understand why. I don't know what was going on here. I really don't. Maybe a lot of selling. I don't know. Maybe there's a bug. But yeah, I don't. It's been dead. Let's check out the news real quick. This is so weird. Is this weird or what? Does anyone else find this kind of odd? China's building a moon. They're going to the moon, guys. They're really going to the moon. Well, they're putting up like a satellite or something with a spotlight on it. That is so weird. Why would you want a light on you in the middle of the night anyways? This is some... Listen, it's going to be some weird draconian, tyrannical, like, who knows what they're planning. It's probably going to, like, shoot lasers or microwaves at people and fry them. I don't know. It's weird. It's like a giant spotlight. Like, why would you do that? That's just... What? Why? So you can search for people? Russians to test space mirror as giant nightlight for Earth. A giant nightlight for Earth? When was that? That was probably a long time ago. Probably during the Cold War. I don't know, guys. The world's... It's not what it used to be. Some more killer robots. I thought this was these two, right? McAfee, I don't know. It's weird. You kind of like him, you know, because he did shill a coin. I don't know. So Novogratz, crypto fund is Fidelity's first custodian client. There we go. So Novogratz, I'm surprised he's lost so much money for his clients. He pretty much bought in at the all-time high and just crashed with the market and held all the way down. I don't know when his clients are going to capitulate, but that, like, you would think you would be able to spot that it's a bubble. I mean, it was pretty obvious. You could have watched me and know. So yeah, I mean, Fidelity, one of the largest financial institutions with a very long and trusty track record. And I mean, they're in the crypto, guys. This is why I'm still making these videos. I'm still here because I believe this market is not going to go to 1,300, 3,000. It might go to 3,000, but I think the bottom will be, I think 2019 we'll have the bottom in and we'll be going back up. That's what I think. Am I going to trade and invest based on just that theory? No, I'm not. I use technical analysis. That trumps everything. But my gut feeling tells me in all this freaking news about institutional money. I hate saying institutional money. Like, I sound like an NPC, but there's just so many signs, and I mean, the writing's on the wall. So that's really all I've got to say, guys. All right, so hang in there, and believe me, I think when the bottom's in, I think we could go into a bull market rather rapidly. The only thing that is sort of questioning it is if the stock market really does crash, will it be negative for cryptos? Maybe in the beginning for a few months? I don't know. That's why we have charting, because no one can predict the future and time it, right? And charting, you know, it's probabilities. It's not I'm not an oracle here. So right now I'm just talking out loud and rambling. All right, guys. If you're new, check us out. The links are below the video. We have a free Telegram group where I post news and Bitcoin charts and my thoughts and memes and funny stuff. And we have the free room where you guys can share ideas, talk to one another. It's a free space, not a safe space. Unless you say something stupid to me, right? And then we have the private membership where we share ideas, talk about OG crypto things, and I also provide an altcoin research and ICO analysis for you guys. And I also share my altcoin trades live, okay? And you guys could learn from that. Then I have the mastermind group chats, right? The elite one will be for paid members who will buy the mining stock research, which is coming this week. All right, guys. Here's the free room, though. I'm posting all kinds of stuff in here, information, whatnot. And check that out, too. It's not in the links yet. I got to put it in there. I forgot. But you could find it if you go to the Wolfpack Cryptos free room. It's pinned above, right? Okay. It's pinned up there. All the chat rooms. See? Click that. And then I'm going to come out with a website. And I'm going to get everything organized a little bit better. Easier for you guys to find everything. And then I'll have the gold and silver research up and running soon. Alright, guys. Yeah, so like this video, share it, Twitter, Telegram, Instagram, whatever, Facebook. Until next time, guys.